It's a Friday and the last edition of the market review for this week on the 10th of July 2020. Let us give you a lineup of what we're discussing this morning. Moody's analysis on Nigeria and key banks, some corporate results, notification of meetings from quoted companies, and developments in the fixed income, bonds, and money markets. Let's begin with the major story that has been on since yesterday, and that's the Moody's Investor Services has completed a periodic review of a group of issuers that includes Nigeria and many included related ratings. The review did not involve the ratings committee, and this publication did not announce a credit rating action and is not an indication of whether or not a credit rating action is likely in the near future. Credit ratings and or outlook status cannot be changed in the portfolio review and hence are not impacted by the announcement. The credit profile of Nigeria, according to Moody's, issuer rating B2, reflects economic strength supported by the country's substantial oil and gas endowment and long-term growth prospects, though constrained by very low gross domestic product per capita. Institutions and governance strengths with very weak institutional capacity, high levels of corruption, and very poor policy effectiveness. The BA1 fiscal strength with low levels of public debt but a high interest rate payments to revenue ratio explained by an underdeveloped revenue base, itself over-reliant on hydrocarbons revenue, and BA on susceptibility to events risk driven by political risk due to a fractious political landscape, militancy in the Niger Delta, and violence in Northeast that aggravates income inequality. That is the Moody's Investor Services insight into Nigeria. Now here are the summaries of its review of Nigeria's leading banking groups quoted on the Nigeria Stock Exchange. And let's begin with First Bank. From its reviews and summaries, Moody's says First Bank's BCA reflects its improved asset quality, satisfactory capital buffers, and resilient profitability that is supported by its strong capacity to generate good levels of pre-provision income. The ratings also reflect the bank's stable deposit-based funding profile, high stock of liquidity assets, and resilient foreign currency liquidity buffers. These trends are moderated by Nigeria's challenging operating environment that is worsened by depressed oil prices and ongoing coronavirus pandemic. That is the best credit assessment for First Bank. And let's move on to Zenith Bank. Zenith's B2 base credit assessment reflects the bank's good capitalization and profitability, which combined provide a good buffer to withstand expected asset quality deterioration. The ratings also reflect the bank's significant liquidity buffers and its deposit-funded balance sheet that benefits from its robust franchise. These trends are balanced against Nigeria's difficult operating environment, which is worsened by the depressed oil prices and the ongoing coronavirus pandemic, and the bank's relatively high proportion of confidence-sensitive corporate deposits to total deposits. That is the assessment for Zenith Bank. Now to United Bank for Africa. The base credit assessment from Moody's Investor Services shows that the UBA reflects its moderate assessed risk because of its more diversified loan book and the bank's resilient profitability, although expected to reduce. The ratings also reflect the bank's deposit-based funding profile. These trends are moderated by the bank's rising market funding and its exposure to Nigeria, which is experiencing a challenging operating environment worsened by the depressed oil prices and ongoing coronavirus pandemic. Now to Guarantee Trust Bank. For Guarantee Trust Bank's B2 base credit assessment from Moody's Investor Services, it reflects its strong capitalization and solid profitability, which provides significant buffers to absorb expected asset quality deterioration. The ratings also reflect the bank's good liquidity cushion and its deposit-funded balance sheet. These trends are balanced against Nigeria's difficult operating environment that is exacerbated by depressed oil prices and the ongoing coronavirus pandemic. And also, let's go on to the First City Monument Bank. And in terms of the base credit assessment from Moody's Investor Services, the FCMB has reflects the bank's robust capitalization and stable deposit-based funding, as well as good local currency liquidity buffers. The FCMB's strengths are balanced against its high asset risk, driven by its high single name and sector concentrations amidst Nigeria's challenging operating environment and the bank's modest profitability. Those are the ratings, base credit assessment, and initial statements from Moody's Investor Services on Nigeria and key financial institutions in the country. Let's go on to some notices, and notice is hereby given that a board meeting of the Ikeja Hotel PLC will be held via teleconferencing on Wednesday, July 23, 2020 by 11 a.m. to receive and consider, among other business, the second quarter financial statements of the company. Consequently, and pursuant to the Rules 17-18 of the Rule Book of the Nigeria Stock Exchange, Ikeja Hotel PLC wishes to bring to the attention of the investing public that from July 8, 2020, the company had commenced a closed period. Therefore, no director, persons discharging managerial responsibilities, and advisors of company and their connected persons shall deal in the securities of the company. This period shall be reopened 24 hours after Ikeja Hotel PLC's second quarter financial statements have been submitted to the Nigeria Stock Exchange. Also, the notice has come from the Initiate PLC that is holding its proxy meeting on Thursday, the 30th of July 2020 at the conference room of the Initiate PLC, plot 400, location New Road, off Aba Port Harcourt Expressway by Oyigbo Junction, Elege, Eche, River State, by 11 a.m. The meeting is to transact the following: ordinary business, to receive and consider the audited financial statement as at December 31st, 2019, the report of the directors, the audit committee, auditors' report therein, to re-elect directors, to reappoint the auditors, to authorize the directors to fix the remuneration of auditors, and to appoint and reappoint members of the audit committee. The special business of the Initiate PLC meeting will be to consider and approve the remuneration of directors. Now going into additional statements or notifications of meetings, in accordance with the provision of Section 1 and 2 of the rules of the Nigeria Stock Exchange relating to board meetings and general meetings of issuers, there's Stanbic IBTC Holdings wish to inform shareholders that a meeting of the board of directors of the company is scheduled to hold on Wednesday, 29 July 2020 at 1 p.m. The meeting will discuss, amongst others, the company's consolidated and separate audited financial statements for the first half of the year ended 30th June 2020, as well as a proposed interim dividend. In view of the above, the closed period for the release of half-year results, which commenced on Monday, 1st of June 2020, will continue to be in effect until the release of the company's half-year audited financial statements. Livestock PLC, Livestock Feeds PLC released its first quarter 2020 unaudited results for the period ended March 31st, 2020, where it declared 40.5 million naira profit after tax. Here are additional key highlights from Livestock PLC's performance. Its revenue grew by 2.79% to 2.5 billion naira from 2.4 billion naira in the previous quarter. Its profit before tax grew by 325% to 59.6 million naira. Its profit after tax grew by 325% to 40.5 million naira, while its net asset grew by 2.5% from 1.61 billion naira to 1.57 billion naira. Now let's go on to the fixed income market, bonds, and of course the money market development activities captured by Zcrest Capital and published on ProShare. First, let's begin with the bond market. The federal government of Nigeria bond market continued on a very sluggish note, although with increased activities compared to the day before yesterday. Market interest shifted from shorter dated maturities to the long end of the curve, especially on the 2034s and 2049 papers, which saw most of the market actions, settling around 10.10% and 10.88% for most of the market trades. Zcrest also saw some supply in 2026 maturities, which initially offered 7.25% but lost 5 points to close the day at 7.30%. Subsequently, yield compressed by an average of 7 basis points by the close of business yesterday. Zcrest expects mixed sentiment in the final trade sessions of the week today, with more actions from the profit takers expected at the tail end of the curve. Let's go on to Treasury bills. The automobile space remained bearish yesterday with less aggressive offers despite the improvement in system liquidity. Contrary to the bullish expectations, Zecres saw more volumes on the offer across the OMO curve, especially on the latest OMO issue 8th of June bill, which remained around the mid-6% level. This sustained bearishness caused yields to further expand by 46 basis points across the benchmark curve compared to yesterday's closing. Contrary to OMO bills, Zecres noted slight interest for longer-dated National Treasury bills, especially for July papers, although varied trades were consummated as offers stayed close to 2.10% level, making it difficult for much of the bids available at 2.50%. Zecres expects market bearishness to ease slightly with increasing interest, especially for the longer-dated OMO bills. Now to the money market. The interbank market heaved a sigh of relief, opening the day, that's yesterday, with 102.33 billion naira positive as inflows of over 300 billion naira from the cash reserve ratio refund and swap maturities hit the system. This caused overnight buyback and overnight rates to drop by 23.66% day on day. However, despite the inflows, most banks opted to remain at the SLF window rather than seeking funds from the interbank markets. Zecres expects a further drop in the rates today since the market does not expect any major debit to hit the interbank system at the close of the week. Let's go on to the foreign exchange markets. The dollar and parallel and cash market closed 0.20% higher yesterday compared to day before yesterday as Naira depreciated by an average of 0.75 kobo at both windows. However, in the import and export interbank window, Zecres saw the Naira appreciate slightly by 25 kobo, albeit dollar scarcity perseveres, causing trade volumes to remain low, with banks staying bidded for the most of the trading session. Now to the Eurobonds market and activities there. The Nigeria sovereign strengthened yesterday, although trading volumes stayed slim for the session. The bulk of the action was noted at the belly of the curve, especially on the 2031s, while yields compressed by an average of 2 basis points across the sovereign curve. In the sub-Saharan Africa region space, Angola papers pulled back some of the recent losses to outperform other sub-Saharan African sovereign papers like Ivory Coast, Egypt, and Ghana, as prices gained plus 25 cents day on day on the 2025s. The United Bank of Africa Nigeria Limited 2022 papers was the most active of the Nigerian corporate stickers, as the yield on the paper weakened by approximately 10 basis points, while yields remained mostly unchanged on all other tracked papers. Those are the updates we have. And let's just give you once again some key interesting developments that occurred in market review and across the market this week. The first major one was, of course, the decision by the Central Bank of Nigeria to move towards closing that gap in the foreign exchange market. That means that the central bank has moved towards unifying the FX rate and has put up 380 naira to a dollar, expecting banks and other groups to align with this decision. This will have wider impact on the market, and we'll continue to engage stakeholders in the market on the implication of this. Also in the week, we discussed with some market experts, and they have said that foreign portfolio investors are still worried about Nigeria's foreign exchange markets instability and lack of clarity in terms of direction. And so this is not incentivizing investments and the challenges of entry and exit. And so that is one issue that we'll continue to monitor, because through the week, it shows the challenge of FPIs. And if you look at it, FPIs are major inflows in the country. Even looking at the first quarter 2020 capital importation report shows that FPIs account for over 77% of the inflows. FDIs are still a low, below even 5%. Also in the market, we knew that the new Director General of the Securities and Exchange Commission, Mr. Lamido Yuguda, resumed office and assured market stakeholders that there will be zero tolerance for any market infraction or any mismanagement of market activities by operators or any attempt to swindle investors would not be tolerated. Mr. Lamido Yuguda also committed to fully implementing the Capital Market Master Plan and also work together with all stakeholders to develop a vibrant Nigerian capital market. That was a very key statement to bolster market activities, and we'll continue to watch the activities of SEC with this new leadership in the days to come. We have said it that we expect very soon and not delayed the first Capital Market Committee meeting where discussions around the activities of the market with all stakeholders will come to the fore and a clear direction of where the market is going as we are in the second half of the year. That is so interesting. In terms of innovation, the Nigerian Stock Exchange upgraded its X-Issuers platform to make it more user-friendly, to enable more data access, and also to create value in the market in this period. It is leveraging technology, which has become the bane of operators in the period of the pandemic. Some people have thought that this pandemic would really affect market activities, but rather pulled all the major exchanges from Nigerian Stock Exchange to the FMDQ Securities, to the NSD, OTC, and even the Afex Commodity Exchange to leverage technology. And we're seeing that technology has been able to drive activities in the market, even seeing domestic investors being the key players in the market. Interesting innovation coming from the Nigerian Stock Exchange. And then, of course, the Moody's Investors Assessment has come on board for Nigeria and key financial institutions, showing how they are rating, and we'll get more ratings and analysis as they come in the course of the new week. Those are very interesting insights. Just want to let investing public know once again that in this period of the pandemic, in this period of global market uncertainty, and even the fear of a second global wave hitting and causing disruptions, platforms are on board in their hundreds trying to take advantage of vulnerable investors and the populace. We advise you, please, do not put your money, particularly your investment, your savings, into platforms that are not registered or regulated by the Securities and Exchange Commission. Try to make inquiries and also follow statements issued by the Securities and Exchange Commission through our platform, www.prochange.com. If you need any additional direction or understanding of what's developing in the market and what funds you can invest in, you can send messages and, of course, to research@prochange.com, and you will get responses. This is not a time to make wrong decisions and choices in investing money in platforms that are not regulated or registered. This has been a bad trajectory for the country, and remembering the experience of the MMM several years ago, which according to the National Nigerian Deposit Insurance Corporation, NDIC, we lost billions of naira because people invested in those platforms. We need to take caution in this period and avoid those platforms so that we don't have to go to that pain of losing hard-earned money and even our life savings. That will be all for this edition of the Market Review. It has been an interesting week looking at developments in the financial and capital market. Join us next week from Monday to make this happen again, where we'll look at very interesting insights and activities in the market. And it's a weekend for you. Just get a tap. Join our website, www.prochange.com. Watch our videos, read our reports and analysis to get insights into what's happening in the market to make the wise and informed investment decisions. Till we come your way again, thank you for watching. Have a nice day and stay safe.